Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, April 19th, 2016. In this video, we'll take a look at some of the sectors that stand out. What prompted me to do this video is a post or a question or a request, I should say, from Kay Stellish in the trading room, who mentioned or suggested that I do a comprehensive video on all the sectors and industry that stand out. Um, I've always gone through part of the site. What I do is if I have a sector that I'm interested in, bullish, bearish, long, short, I point it out, and it's usually there it is, and that post goes out, whether it's a video, static post, I mentioned in the trading room. And I realize that there's quite a few of you that don't have the luxury or the desire to do this full time, be in the trading room all the time, and try to piece together all the front page posts that are sporadically come out. So I think it's a great idea, and I plan to incorporate this going forward, where every so often, on a fairly regular basis, I'll put together a video of we'll call it the good, the bad, and the ugly. In this video, I'll start out with the most bullish sectors. I do realize that the majority of traders are long side only or prefer to trade, aren't big on shorting. If there's time at the end of the video, I'll go over the ugly. In other words, the sectors that stand out as the best shorting ops. As most of you know, I like to, when possible, at most points in time, trade a long short portfolio. It helps, it's a way to diversify, to hedge. I mean, if the market's in a very strong uptrend or a very strong downtrend, I may be 100% short or 100% long. But in most market conditions, the market's slogging around. Even if the primary trend is working its way up or down, I can find at any given point, make money on both the long and short side. And in doing so, it does also help to smooth out the ups and downs in your portfolio versus being 100% long or 100% short at any one point. So enough on that. We'll take a look today at some of the sectors that stand out. As I said, if time permits, I'll go into the short or bearish sectors, but we'll start out here with the long / bullish sectors in no particular order. I'm going to start here with one of the unofficial trade ideas. These have just done phenomenal recently. First brought to my attention a few weeks ago by a member of Blue Magic in the trading room. There's a few others that have chimed in and are interested in trade this sector and have added some other names brought to my attention, which I put on the watch list, one of those being TRC. And I'll start with this sector, not only because I've actively engaged it recently and put up quite a few posts within the trading room. Most of these stocks, if not all of them, didn't make what I call front page or official trade idea criteria because these are penny stocks. And, I'm an equal opportunity trader. You give me an opportunity to make money in anything, and I don't care what it is. I don't care how expensive or low priced, even low volume stocks. I'm in and out. I have more conservative growth and income trades / investments, and if the time is right and the risk return is there, that's most important. If I see the risk and return profile favorable and well-defined setups, as I did in the marijuana stocks, the cannabis stocks, that's what I'll trade. And these stocks have literally exploded, and that's not completely uncommon with penny stocks. Stocks are trading a few cents a share. 2, 3, 4, 500,000% moves are not extremely rare. You do see those quite a bit from time to time. So what I wanted to start with, this sector still has a lot of promise. There's a lot of movement going on here. This is one that was mentioned by a member in the trading room, TRTC. And what I'm going to do, the reason I'm starting on these cannabis stocks, I want to sort of convey my trading style with a sector, especially a hot sector. As you know, if you've watched any of the recent videos, cannabis and shipping stocks I've been hot on and beating the drum on those sectors. Those are both extremely momentum-driven, volatile sectors. I mean, they can trend down or sit in a sideways trading range for a while, but because those tend to have a lot of low volume, small float, smaller market cap companies within there, it doesn't take a lot of buying pressure to send these things through the roof and have them launched on a parabolic run, as we can see here with TRTC, which this is just the last few weeks since it took out that downtrend line here. You can see above I'll try to grab it. That's about where it broke out. There's a 357% rally. And I put it up the other day when it was mentioned in the trading room. It was about right here, and I said this would be my target. And I often talk about, I use a term very often, momentum fueled overshoots. When you have a stock that's running up 20, 30, 40, 50 plus percent a day on some days and is in a parabolic move, this is a parabola right here. It is almost it's very common and almost the expectation that that stock will overshoot resistance. So that was my target, and the overshoot was by quite a bit, in percentage terms, 28, 29%. But look where the stock is today, and that is completely what I expected to happen. Even though it broke above, normally I might say, well, stock took out resistance, now it's bullish. Not in the case of a momentum-fueled overshoot. That was just an area to exit a little bit better price if you didn't sell it there. But there it is. The stock has come back in, and you can see is just hugging almost perfectly that resistance level. And that's one thing about these cannabis stocks. There's not a lot fundamentally behind them, so all they have to trade on really is the charts, and that's what's going on. Now, I have a bigger theme I'm trying to tie in here. There's also a few others. The ones that I've really harped on have been and own personally GR&H. That one hit. I had that target at 80. Took that out yesterday, and I mentioned there was another target around 90, 9.46, 9.5 cents, call it. And it's overshot that. And the same thing, this one had a near vertical rip. There was that bull flag. I believe I was pointing that one out down here. This one was first mentioned by Blue Magic, and I put up the chart. Just great action. Breakout above the downtrend line, bull flag. And now what's happening is this is probably a momentum fueled overshoot. Possible that this breakout sticks, yes, but I'd expect it to come back in and probably hover around one of these two levels. And there's a couple others I'm watching, and have taken profits on. I had I took out the bulk of my shares yesterday. I had a few more I let go today in the mid 190s because the resistance level was at 2. I don't wait till it gets there. I like to sell a little early. And this is the common theme I'm trying to get at. When I have a handful, at least the top picks, the ones I'm watching, this one was confirmed on volume, and they're all at or near resistance at the same time, that tells me get out, especially when you're trading a thin float, low volume penny stocks. You need to sell into strength. You don't want to wait till this sector reverses to start getting out, because what'll happen is once the momentum players leave, the volume dries up, the spreads will widen on these things, and the market makers will just have a field day with you. You'll see a big fat bid and ask. You try to put your sell order in closer to the ask price, but it's so far away from the bid, so you maybe put it down in the middle. They'll just keep walking the stock down on you. Then you cancel your order. Believe me, I've been there and done this. So you don't want to try to exit a penny stock once the momentum has stopped. In other words, it's a game of musical chairs. You want to sell while the music's still going. Sure, who wants to sell it when the darn thing is going up 30, 40, 50%? But it's part of trading. You have a trading plan. You pick your targets, and you stick with that trading plan unless something has changed in the charts fundamentally. So again, the point being that several of these names that I'm watching, GR&H, the main ones that I've focused on all along, CANN, TRTC, as I just covered. There were a couple others here. And I'm trying to recall offhand. Well, there's one at resistance. So I'm seeing quite a few. AMMJ, there's another one I own, hit my target just yesterday. And look at the pullback, 20%. And you can see these are, again, this isn't hindsight analysis. These were targets that were put up before the stock even broke out. And my point being, when you're trading a sector, look at some of the leaders, the leading stocks, look at the majority of the stocks in that sector, and if they're all coming up on a key resistance level, and if a handful of them look like they're going to reverse, that's when you want to get out of the sector. And this one will probably pull back. If it does, come back in. If it comes back to that 20 cent level, 20 cents level. That would be a objective re-entry. But again, based on the entire sector. So if I'm watching AMMJ and the stock pulls back to 20 cents. I want to see all these guys coming back into a nice support level at the same time, ideally with some bullish confirmation via the indicators, oscillators, maybe momentum, other things like that. Maybe they consolidate for a while and set up in some flagging type action, and then the next breakout would be on a break above those bull flags, if again, if the majority of the stocks are doing so. So that's a long time spent on a sector that's really the only one that's not an official trade idea, only because it's so aggressive. But it speaks well to my thought process on these stocks. And then we'll roll into another one that's similar, and I have made this an official trade idea, at least some of the names, and that's the shipping stocks. I put the ETF up as an official long entry today, even though I've pointed it out in the past. It's, the bullish developments have been happening along the way. I did an entire video on this today, so I'm not going to waste any more time explaining that. Just check out the video on the shipping stocks. But the theme here, this is another sector that I really like right now. A lot of individual stocks breaking out, and again, that video was covered in detail today, so I won't spend so much time. But what I'm seeing here, instead of a lot of stocks coming up to resistance after big runs, I'm seeing a lot of these stocks just recently breaking out and taking out resistance. So there's still some work to be done. So we don't have an all clear, all in signal yet, but more and more continue to break out, and the trend has definitely been bullish lately in a majorities, and a lot still have these explosive bases like I talked about on Scorpio tankers. So let's say Scorpio breaks out, and I had a couple others with similar bases like this. I'll watch those if they're all popping, and that tends to be my experience when the shipping sector is hot. These setups are going off like popcorn. There's days I can't even keep up. I might have, alerts popping off every 5 minutes, 6, 12 or more alerts in a day. And, sometimes it's almost unmanageable. I have a lot of different accounts I trade in, and to try to position these guys, you just have to be fast. This point I'm trying to make on things like the cannabis stocks and the shipping stocks, not so much trading the utilities. If you're trading something like the utility sector, or pick up the retailers, anything like that, they're not going to explode and go up 20-30% in a matter of minutes or hours like these stocks will. So keep that in mind. Know what you're trading. Know what the volatility is, not the current volatility I often talk about. When adjusting for my position sizing, here's a stock that's gone nowhere. I mean, it's a pretty fat range between 542 and 645, but this is like a powder keg right here. This is energy stored up. And once stock breaks out, I expect an explosive move. So where volatility, or the ATR, average true range, has probably dropped down in recent months because of this sideways trading range, that's not what I position or calculate my position size on. It's this move that I expect in the volatility going forward. And that's a quick how I trade sector kind of overview. All right, let's just tear into the charts now and look at some other sectors, since I've already went over the shippers in detail. And again, no particular order, but this, my theme for 2016 has been pretty consistent throughout the year. I've been bullish on energy, in and out, cautious at times, in a couple counter trend trade pullbacks, but for the most part, I've had a lot more long setups, and I've maintained for quite a while. Again, I won't go into too much detail on each and every one of these charts, even though this is a comprehensive video. If you want to see more on my analysis on XLE or USO or West Texas Intermediate Crude, just use the search function, or on the front page, use that ticker by that drop-down box that shows all the ticker symbols. But I'm doing this today because this stands out. Here's XLE. There's a nice downtrend line. This is a daily chart. And look at this recent breakout and backtest. And look how impulsive that move off the backtest was. And now we just cleared the high. So energy looks good. I know there's a tremendous amount of bearishness, goodness, in the energy sector and oil. But trade the charts. That's, you guys want to know what sectors look best to me. This one looks good. And I'm talking both near term and longer term. There are some levels along the way. I can tell you that I would add a resistance level right here, but one level after another has been taken out recently. We've had some, when it gets ahead of itself, some bullish consolidation. This could be construed as flagging action and now a breakout. So I think energy looks good going forward. And on a related note, here's XOP, which is the Spiders S&P Oil and Gas Exploration and Production ETF. So the E&P energy stocks here. And before I go too far, remember when trading, diversification, whether you're an active trader, swing trader, or a long-term investor, diversification is every bit as important. Meaning, don't put all your eggs in one basket. That means don't put them all in one stock. Have at least 10, in my opinion, 10 or more stocks when you're trading, whether it's an investment portfolio or a swing trading portfolio. And likewise, don't put them all in one sector. If you're bullish on energy, maybe take it up to 30% or so of your total portfolio size, but you have to know what you're trading, know the individual names. So if you're trading XOP and you're trading XLE, you probably have a good deal of overlap. And then if you're buying some of these individual growth and income trades that I posted in the energy sector or other trade setups, well, those once again are probably held within XOP or XLE. And so you just have that overlap in your portfolio. And if the energy sector takes a sudden dive, then you're really going to feel it. So sector diversification is just as important as stock diversification, in my opinion. So there's XOP, and it looks almost a near mirror chart to XLE. Not surprising. You can see the downtrend line, the breakout, the back test, and like everything else, there'll be some bumps along the way, but as of now, this chart's looking pretty good. A little bit of divergence. I'm cautious right now. I'm still looking towards looking for a pullback in the broad markets, and if that happens, if and when that happens, I should say, energy is probably going to come down in line with it. Let me get the PPO off here for a second. We'll just focus on the MACD. So there's one that I like. I wouldn't be going into a full position in this or really a lot of stuff on the long side right now. But if you're cautious, you start nibbling. You can be cautiously bullish as I am, nibble, take a partial position, and continue to add either on weakness, maybe another back test of the downtrend line. There's some support below, nice support right around this level. You can see the gap, you can see horizontal support, reaction highs. So there's an entry if you wanted to now in XOP, and you stop out if it goes much below $31. And these are targets, and I won't even get to the weekly charts now. We're not going to have enough time. On another related note is I've clearly made the longer term bullish case on UNG, and again, you can go back if you want more details and more reasoning behind my bullish stance on natural gas. Just pull up UNG on that post by ticker thing on the front page, the drop down box, and you'll see. But so far, UNG has been in this sideways to slightly upwards trading range, a lot like the broad markets have been in recently. But you can see that breakout today. Look at see that candlestick right here. Nice breakout above the downtrend line. I'd want to confirm that, scrub that with the charts of spot natural gas prices and nat gas futures, because you can see some tracking error with these ETFs. But UNG, in my opinion, does the best of the natural gas ETFs. There's several out there, but UNG is the one I like to use. And bullish divergence, everything else. So again, I'm looking out. If you're a longer-term investor, trend trader, swing trader, these are the sectors that I like and I think have promise going forward, at least at this point in time. And if the charts change, if this breakout fails and UNG goes on and takes another big thrust back down the wedge, I wouldn't wait till this point to tell you my view has changed. It would be, I can tell you, we have no business at this point moving back below that reaction low from this point right here, and that's around 628. So, not too bad. The natural gas is volatile, so that's about an 8, almost 9% drop. And, even tighter stop could be under that recent reaction low right here. But again, as of now, it looks good. And that's all I want to do and this will be an ongoing thing. So as the charts change or any technical developments out there, I'll try to change along with it. JJG, okay. Grains, I've been pretty consistent for a while now that grains look attractive. You're not going to get rich. These aren't going to be like the shipping stocks where you're looking for, 50% moves in a day or a week. But if you want to look for somewhere, we're in a low growth, low interest rate environment, and you want to put your money somewhere, in my opinion, that's probably better off than the broad markets and the S&P 500. I think the grains look good. I've made the case. And what I've done here is I've put up JJG. Recently, let's break it down. JJG, for you that aren't familiar with, let me looking on another screen, just bear with me and let me click on the holdings. JJG, here we go. Okay, JJG is comprised of, as it says, it's a grain ETF, so it has 45. I'm reading off IPATH, the IPATH ETF, Barclays IPATH ETF site. And as of February 29th, I guess that's the most recent data they have, corn, which also has an ETF. And these, again, were trade ideas on the site, official, unofficial. And here's corn, my ETF. You can see nice breakout, beautiful back test. Came in with that intersecting downtrend line. This was the wedge, so it back tested right about the apex and has moved higher. This is resistance, and these are all my targets. So I see corn over time going up to probably that almost at $27 level. These aren't official targets. Corn again was 45, almost 46%. Soybeans, this is an official or was an official trade idea. I didn't extend my targets yet, and so it hit that 1890 target yesterday. So in keeping with consistency, unless I extend a price target in advance of my final target, I'll have to close the trade out at that point. Otherwise, it would be hindsight for me to tell you if you booked out, oh, and I'm going to extend this trade another 10, 20%. And I still may. Even if it takes that 1890 out, I might not wait for a pullback. I like it. I still own some, and in longer term accounts. And I think soybeans, have some room to go. So that's about a 35% weighting in the JJG. And so my point here is that if you I know some of you have either limited time or maybe limited funds where it's hard to diversify among all these individual commodities that I'm talking about, because all commodities aren't created equal. I mean, you have agriculture commodities. Within ag commodities, you can drill down. You have the grains, you have the beans, you have cattle, you have orange, you have all kinds of, and they all there's not any direct relation with somewhat with grains, but you can have some going up doing great and others not. So my point being that commodities is a very broad arena, and you want to be commodity specific when trading those. But the charts right now on the grains look all similar, very similar, I should say, with these falling wedges, and they're confirmed on the weekly charts. And here's wheat. So to keep it simple, instead of doing corn, soybeans, and wheat, those three ETFs, you can just do the JJG, I think, yeah, JJG. You can see there, downtrend line. It's not all marked up here, but you can see the nice wedge pattern and divergence low. See the MACD actually goes all the way back to this point here. That was the RSI, I should say. There's a MACD. So a bullish falling wedge, breakout, targets I'll list later on, but I'm just giving you ideas right now. There it is on the weekly chart. So you can see the PPO, strong divergence, RSI, strong divergence, nice bullish falling wedge. And this is, to me, this is where I'd rather have my money. If you said you can put all your money right now in the S&P 500 or put all your money in commodities or grains, for example, here, and you have to walk away for a year, this is where my money goes. All right, JJS. These are the soft commodities, so another option if you want a little more exposure and don't want to do the individual. You can see the falling wedge, breakout. There's a horizontal level, resistance level. Divergence. That one's probably headed, I can tell you with a pretty good degree of confidence, this would be a nice target zone right here that if and when these recent highs get taken out, that's probably the next stop up there. And, again, they're, commodities, so it's 20%. Yeah, it's a weekly chart, guys. I should have clarified if I don't mention it. It's up here in the upper left-hand corner. Daily chart. It's thin. That's a thinly traded one. Let me pull a quote on another screen here. JJS. And Yeah, that one has, you can see, when you see these candlesticks that just look like little dots, those are the ones you stay away from. I had a question on C today, SEA, because C is low volume, but when you pull a chart of C, the shipping ETF, see that, how the candlesticks look like any other active, it could be Apple for that fact, or any other actively traded stock. That shows you the spreads tend to be tight. So C, even though it's a very low volume ETF, the way this ETF is managed, whether the ETF company does that, whatever reason, even though it's very low volume, you have liquidity. But on that last one I just mentioned, you didn't. The spreads I'm looking at it are ranging right now. Well, they just tightened up to 4 cents, 1270 by 1274. But on C, oh no, I'm sorry, I'm back on C. C as right now. Earlier today it was 1 to 2 cents. Now it's 4 cents on C. That's 1270 by 1274. So not bad. Especially for a longer term. You don't want to day trade anything that has a 4 or higher cent spread on it, but for swing trading, it's not a big deal if you're shooting for a upside gain of 13+%. All right, moving on. GDX. I've maintained a bullish case going into the year. Was foolish enough to try to catch a few pullbacks that never happened. This was just an explosive move. Everything I talked about back then and just didn't play out. I said, well, if we had that fake out move below 13, that could lay the groundwork for a nice bull trap with some powerful implications. That's exactly what happened. So, longer term, I'm still staying away from this sector right now because gold needs to confirm, and I'm seeing some things on the charts. But going forward, if you ask me, put your money away, sail around the world for a year, I still think gold and the mining stocks look good. So I'm mentioning those as cautiously bullish on right now. Here's GLD. See, GLD, this is the problem, hasn't even come close to taking out the recent highs. There's the 60-minute chart. So the high's back on March 3rd right here. Gold's still well below that range. Pardon this chart. I have a lot going on here. But see, the miners have taken off. And that is, I'm sure, well, unarguably bullish. But the miners, as I've often said, aren't going to go anywhere without the metal ultimately confirming because they track the metal. They're going to, within give or take trade, follow what the metal does up or down. So this breakout to me is suspect until I see gold take out the new highs. You can see the breakout of the trading range. I should put it down here. That's the trading range I was watching, and we did break out of it, but like I just showed you, gold hasn't. So this breakout is at higher risk of failing if gold doesn't giddy up and start moving out and taking out those highs back from March. So pretty much that's March 4th. That's a month and a half of dead money so far in gold. Gold's actually traded down over the last month or so, and you can draw a downtrend line there if I want to make this chart any busier. And that shows you that, and here's another downtrend line. You can almost make a channel. Gold's in a downtrend since then. Not much. Call it sideways action. I don't want to try to be overly dramatic, but it's near-term downtrend, but intermediate term, just sideways consolidation action. So that's why I'm a little bit cautious and I don't have GDX as a long right now, but may in the near future if gold confirms. Silver actually is shaping up. That's one thing I was waiting, that was giving me pause as well. This is a weekly chart on silver, SLV, the silver ETF. And I had been saying all along, this was a downtrend line I wanted to see. For a while, silver was lagging behind gold, but you can see up nice today. So this is bullish. This is definitely a bullish development for the miners because a lot of the GDX components, even though it's called the Gold Miners ETF, many of those are silver miners as well. So they derive a lot of their production from silver mining. So you want to see silver and gold both moving up ideally for GDX. So that's that. So precious metals look good. There's platinum. Platinum has some work to do. This is the ETF, PPLT. It's the one I like to trade if I'm using an ETF for platinum. We have a level there, 99.16. It needs to take out. But again, longer term, looks good. So precious metals, miners, just a little iffy on the entry right now. I want to see a little more work there before committing any capital to those. FXI, I mentioned this. I did a static post and I think even a video recently. Looks good, from a bullish point of view. Divergent low, breakout. We took out, breakout of the falling wedge. Took out this level. These are all resistance levels overhead, but given this isn't a sector, this is a country. This is FXI, the Chinese ETF, tracking a lot of various stocks within the Chinese market, or maybe in this one 25, but sort of like our Dow, I assume. And but one that looks good. And moving on again to countries, Australia looks good. I mentioned Australia recently. We had this divergent low you can see here. Positive divergence on the RSI, MACD, nice breakout today. The gap away, see that candlestick. So this one looks good longer term. And as I mentioned, I did a video recently on global markets, and the theme to me seems to be it aligns with what I'm seeing in commodities. Obviously, if commodities do well, these commodity-dependent countries, those countries, whether or not commodity-dependent, but large commodity producers, I should say, will tend to do very well. So that's been the range for most of the last year or so that EWO has been in, and we're still in that range. So we've broken out here. Once we take that level out, that'll be the next buy signal in EWO. So that's another one that looks good. And finally, with countries, I also mentioned Russia. Russia has some bullish price behavior recently. This is RSX, Market Vectors Russia ETF. Had a very extended run after this divergent low. You can see here with these lines on the MACD and the RSI. And again, this was covered in detail in one of the recent videos, as well as, I believe, a static post. Bull flagging action right after the breakout. It held, back tested the downtrend line from above while working this way in this flagging type pattern. Broke out of the flag, back tested it, and now has moved up a little. We still have this level to contend with, but so far, this is key. This is a bullish breakout, and should this hold, and that really, as of now, the longer term bullish case looks good for Russia. Of course, we need to take out that 1790 level, and if and when that's taken out, it should be a pretty smooth sailing up to about 2074. So let's see, anything else here for you? Another commodity, not a grain, but sugar. That's done pretty well. This divergent low back here was pointed out, this trading range. So sugar looks good, from that daily and weekly chart. Has a little work to do. See this long-term downtrend line, and I'll have to scrub this against the spot chart of sugar prices. This is just an ETF. They do a pretty decent job because they're not too volatile. A lot of these commodity tracking ETFs, but that you can see the base here, this bottoming pattern here, this base, and once we get above this horizontal line, especially this downtrend line, things look good, and sugar might have some room to run. Maybe on a new bull market. A lot of these commodities are coming off multi-year bear markets. You can see the highs back here in 2011. So that's another reason I like these. And finally, what goes with sugar but coffee, unless you drink it black. So here's Joe, the ETF JO. Breakout. It really got to all the way to the apex and then some. So it was a little bit of a sloppy breakout. But either way, since then, moved up nicely, had a consolidation, a pullback, and seems to be charging back up again. This was a key level here. Now that reaction high would be your next level. You want to see this reaction high get taken out. So there it is. And there might be some other commodities out there I didn't touch on. But that's the theme now. That's what looks good. And being that I'm short on time, this video has gone over, I'll have to do the short trade ideas, the bearish sectors in a separate video. Okay, this has been Randy Finney with the right side of the chart. Hope you enjoyed it.